Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Tuesday, September 15th, 2015, and this is the daily report for gold and silver. We have gold under moderate pressure today, trading off approximately $3 on the day, 1104.93. That's our current print when we look at spot gold on the market. We've had a low of 1102.67. High of 1109, so a very, very tight range on the day. As far as silver goes, silver is currently trading in essence unchanged, 1440.8.9 in that area. When we look at a daily chart to really give you an idea of what we've seen in terms of activity, you can see although there's a slight green hue to this candle, this daily candle, it's not too much different than the actual open of the day. And as I said, so we're trading in essence unchanged on the day. Now in terms of the range, again, not very much range. We're at 40. We've seen a low of 30 and a high of 45. So about a 15-cent range on the day in silver. Now, when we look at some of the other precious metals, specifically platinum and palladium, they are both higher on the day. Platinum trading almost a full percent higher, up about $8, but it is below $1,000. The stellar mover of the day with the equities markets really back on fire has been palladium, back over $600 per ounce, up over 2% on the day, a $13 move, currently at 601.45. So traders, we're looking at our daily chart. This is a daily chart of spot gold. I've got one fib retracement, and that retracement roughly takes us through this last rally, meaning it starts roughly at 1071, ends at 1171. So what we're in essence looking at is a $100 move to the upside, or a rally starting from this low here up to this high. Now, when we put that in, of course, whenever you look at a bull move in the market, a set of bull waves, you'll typically get a rally and then a correction, but that correction significantly should stall somewhere between 38 and 61%. 61% is 1110, 1109. That's why that number's been so critical for us. Now we've got this absolutely, I believe, as a resistance area in the market. You can see the high yesterday, the high today. Cannot make it to that particular area or price point. We've seen a solid sell-off in the market with this low at around 1100. That happened a few days ago. And my sense is that barring any change in the fundamental lexicon, meaning in what we're looking at and the way that we're reviewing the data that's out there, we should see gold continue to slide lower. Real support in gold cannot come in on a technical basis till approximately 1095. That's a 78% retracement. That's this line that I've just added here. You can see you've got really a lot of noise, and when I say noise, meaning you've got a series of highs and lows that are within the range of about 1080 on the low side to about 1105 on the high side through here. So when we see these lows at around 1100 or currently trading 1105, it's really at the top end of this range. I don't see any real support coming into this market until, as I said, 1094. So traders, in as much as I had been hoping for some sort of a small bounce in the market that would give us an opportunity to position ourselves on the short side from a better price point than what we've seen over the last 3 trading days, meaning Friday, Monday, and today, we've not gotten any kind of an upturn. In fact, we've had very, very tight ranges and tight ranges to the downside. So I do want to position ourselves short in the market. Traders, you can take a stab at it here. It's currently trading at 105.19. I will send out a special trade alert in a couple of minutes before we actually go and air this video. But that's my rationalization for taking a position in now when we have been waiting to get some sort of a better price point to enter. We're just not seeing that as we get closer and closer to the Fed meeting. And I do apologize, I incorrectly stated that we're starting today. That, of course, starts tomorrow, concludes on Thursday. I want to be able to position ourselves on the short side before the actual FOMC gets underway today. So traders, assuming that you take the position, enter the market short, as I say, we're roughly at 11.05 at this point. Where's a logical place to put our stops? And of course, first, you definitely need it above 11.10. That, of course, as we talked about, is a 61% retracement. But more important than that, we want to take a look at these most recent highs. This high up here is roughly at, call it 11.13. This high here is at roughly 11.15, 11.14.46, somewhere in that area. So my recommendation is to place your stop just above 11.16. So traders, as I said, I do recommend initiating a short position in gold. As I said, currently trading roughly at 11.05. Stop should be above 11.16. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.